Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 25th of April. Starting off with the FTSE 100, where we're just on the wrong side of 7,900, been in a mini range between roughly 78.60, 79.40. Looking for an end of day close through the upper end of that range, maybe 79.30 plus, to give us the chance of a retest of February's all-time intraday high, 80.47. Above that, looking to as high as 82.50, which is the top of that rising trend channel from September. On the downside, below 78.60, probably looking at the 50-day line here, now around the 77.70 area, but lucky maybe just down to 78.10 or 20, which is that broken February resistance line. On to the DAX, and here the story, the same one that we've had for quite some time. So broken February-March resistance at 15,700 and holding above that, that's become a new support. On the upside, looking for 16,500 as soon as the end of next month, while we hold above 15,700. Below 15,700, there's the risk of 15,400, which is the area of the rising 50-day moving average. But surprisingly quiet and unvolatile is the message at the moment. Moving on to the Dow, and here still waiting on that potential break of the 1-year resistance line there, 34,100. We've got a decent stepping stone here around 33,700, which was the initial resistance from the beginning of the month. Above that one would be looking for 34,100 breakers, so sort of almost an inevitable scenario. Above 34,100, looking for as high as 36,500 over the following month if we get that break of the 34,100 area. Below 33,700, risk a test of the 50-day moving average, now at 33,100, but we're not expecting lower than that. Moving along to Bitcoin, and here the hope has been that we'd get up to the 32,000 area at least, even if we then failed after that. In fact, we got up to around the 31,000 area and then came back. Current situation is that we are resting almost exactly on the 50-day moving average. Below that, there's the risk of 25,000, which was resistance on the way up back in February and also back in August last year. Not expecting much lower than 25,000. On the upside, looking for a decent bounce off the 50-day line to take us up to that June resistance line projection, which is now actually pointing up to as high as 33,000. So the longer we wait, the higher that resistance line goes. Obviously, one could argue that that resistance line has already been hit there like that, and that's the best we're going to get. But let's see if this market can surprise in a positive way. At the moment, still the benefit of the doubt towards a move to 25,000, just on the basis that the RSI is below 50 now. Well below 50, and actually failed on a rebound as well. So 25,000, and then hopefully after that a higher low, which will then take us up to 30,000 plus. On to the stocks, and quite a motley bunch today, mostly stocks which are a little bit under the radar, but did suggest in today's RNS hot list that it was unusual that African Pioneer should be near its lows. The lows of the range between around 2 pence, given the progress that has been made, especially today. And the shares are up nearly 30%, looking for 4 pence at the moment, while we're above 2.5 pence and the 200-day moving average. Hopefully we'll see that over the next couple of weeks or even sooner. On to Arc Minerals, which has been looking interesting as a decent turnaround situation. We broke that line of resistance there from basically this time last year, and now bounced off the 50-day moving average around 3.8 pence. The longer we stay above that, the greater the chance of a move up towards not only testing recent resistance through at 4.5 pence, but up to 6 pence, perhaps as soon as the end of next month. The only thing perhaps that we're waiting for now is just really the 50-day moving average to start pointing up, and then that would join the rising 200-day line, which is the reason for the initial bull call here at the moment. On to a stock which is was going to cover yesterday, but decided that maybe I wanted to wait a bit longer to see how it did, and obviously today it's up another 15%. Main reason for looking at it yesterday was Biome Technologies was that we'd broken through the 200-day line quite cleanly, and above that, around the £1 level, looking for £2.50 as soon as the end of next month. So quite high hopes there for that situation. Anything above £1.70 would obviously close the gap down that we had there back in September. Moving along to chilled brands, where it's sort of every day another rising price. Here we are up towards the top of that rising trend channel from back in November. That's was pointing to a 7p target. We get through 7p, we're looking for a steeper trajectory. January resistance line projection up to 11p, and maybe we'd see that as soon as the end of next month. The reason for being so bullish is that we have just had an echo of the February rally over the course of the latter part of April. So sort of near vertical move, then sideways move, and then up again. So it just looks like it's ascending in step fashion, which is normally a plus. On to Capex with the good news today. Here we've got a situation where the shares have consolidated above the 50-day moving average at 2.25. Above that, we're looking for at least the top of that post-January triangle at 4p, and then obviously the post-November resistance at 4.5. But the key here is to hold the 50-day line around 2.25p for Capex. On to Drumz with the news of the new appointment the company's had. Here we've had a bounce off the lows, 5.25p, which was the mid-low back in August. And above that, we're looking for the shares to hit the top of that falling wedge at around 7.2p, and then eventually, maybe over the next month or two, back up to 10p, which is where they were at the turn of the year. Not expecting any new lows for this situation now. Moving along to Firering Strategic, which has bounced nicely today, as you can see. The reason for covering the stock again is that we've got this rising 50 and rising 200-day moving average. That suggests that we should at least get to 11p over the next couple of weeks, the top of that broadening triangle from December, and then retest perhaps the 16p November highs over the course of the following 4 to 6 weeks. So maybe we get there by the end of next month. In fact, both the 200 and the 50-day lines are now rising, implies that we will be heading into a golden cross, and that tends to be the strongest part of the cycle. Bullish here, certainly while we're above the 50-day line at 8p. Stock which is in focus at the moment after a rather painful decline is Ienergizer, and obviously the classic falling knife here. What's interesting is that one would expect after the collapse down towards very oversold levels, RSI around 6, that will at least take out yesterday's high of 66.6p, even if the shares then fall away after that. So looking interesting as far as that situation is concerned. Obviously an end-of-day close above yesterday's high could be a signal that we'll start retracing some of the declines from the early part of the latter part of last week. Moving on to N4 Pharma, which looks as though it is a hero for the day at least. Shares up 15% off the news. Unfilled gap to the upside above a rising 50-day moving average, and looking for 3p at the top of that broadening triangle as soon as the end of next month. Certainly on the bullish tack while we're above 1.9p and the 50-day moving average. TM1 has been a decent situation over the recent past, and perhaps today's news will be the propeller to fresh moves. We already had our target there at that, we actually initially had a target there around 1.8p, upgraded it to 2.2p, and now above 2.2, looking for 3.5 by the end of next month and maybe a bit sooner. Unfilled gaps to the upside, very healthy indeed, and we've also got a rising in 50 and 200-day moving average, so that suggests that 3.5p is probably the minimum that we'll have on the upside while we hold above recent support around 2.1p. Last two stocks, got United Oil and Gas again, which is doing what we were hoping it would do. Here the situation is that we've taken out that previous target around 2.1 pence over the course of earlier this month and today, and above 2.1 now, looking for a fresh leg to the upside as high as 3.5 pence as soon as the end of next month. And certainly while we're above on the right side of 2 pence, that should be a relatively easy target for the bulls. Last stock of the day is one that's been in a descending triangle for the last best part of 2 years now, but we're looking for an end of day close above the 50-day moving average at 0.53 for Zenith. After the bounce off of very oversold conditions, we had a bounce off oversold conditions back in July last year, and that effectively doubled the share price. Looking for the same kind of thing now, with the confirmation being an end of day close through the 50-day line, which should then take the shares at least up to the top of that falling trend channel at 0.8 over the following 4 to 6 weeks. Not expecting any fresh lows for the stock, given the latest setup. That's it for me today. More updates tomorrow.